Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Boyajian, currency analyst, and here with me is our chief economist, Michalis Florentidis. So Michalis, it's been a bit of a strange week. We had the week starting off on a pretty negative note. The US announced a fresh round of tariffs against China, those $200 billion worth of tariffs on Chinese imports. But then we saw a dramatic turnaround in risk sentiment, which led to a rally in stocks as well as non-dollar currencies. The dollar, in fact, managed to decline this week. So what's the reason behind this, and what were the best performers?
Yes, I think that the main reason was that the tariffs themselves on the 200 billion worth of Chinese goods were a little lower than anticipated. So for the moment, they are at 10%. They are not 25%. Of course, this could be related to the Christmas season, and maybe Trump didn't want to bump up the prices of a lot of Chinese goods that are sold over Christmas, thus making life very difficult for retailers. But another positive factor was that China's retaliation was not so aggressive. It did retaliate. It's going to put tariffs on 60 billion worth of US goods, which it imports, but the tariffs are ranging from 5 to 10%. So in a sense, China is retaliating, but it's sort of leaving the door open. So that was interpreted by the market as very positive, although we do have to say that the US tariffs are going up to 25% at the beginning of next year. So I think this provides just a window of maybe some negotiations and a negotiated deal. So as you said, the dollar was down and even was one of the worst performers. And even worse performing than the dollar was the Japanese yen, which exactly because it's a safe haven, so it did drop. And we also had new all-time highs for U.S. indices such as the Dow Jones Industrials and the S&P 500. Another interesting point this week was the UK pound. It managed to rise versus the US dollar, although its gains were similar to the euro's gains. So in a sense, taken in aggregate, it wasn't as if the pound had outperformed. It's interesting for the pound, we didn't have any progress in the Salzburg summit of EU leaders. There wasn't much progress reported there, but we did get some positive UK statistics on inflation and retail sales. So this was good news. And with positive risk sentiment, of course, the Aussie and the Kiwi were quite strong, as was the Swiss franc, despite the jawboning of the Swiss National Bank, which said that the currency was high and it stood ready to intervene. Having said all this, Rafi, what do we have to look out for next week? I understand that there's a Fed meeting, so what should we be on the lookout for?
That's right. We have the Fed meeting next week coming up. So the dollar's pullback might be short-lived if the Fed does sound a more hawkish tone. In particular, although we do know that they're very likely to raise interest rates by another quarter of percentage points, what's going to be interesting is how many rate rises they will be predicting for 2019. And given the strong US economic backdrop, they might be expecting a faster pace of rate increases in the coming year. On the other hand, we do have those trade risks potentially weighing on the US economy. So there's a bit of uncertainty about the Fed's forecast, so that could potentially cause some volatility for the dollar. We also have a Reserve Bank of New Zealand policy meeting. We had some very strong GDP numbers this past week, which beat expectations. So perhaps we might see a less dovish RBNZ this time round, and that could boost the Kiwi even further, which rallied to 3-week highs this week. Another possible risk for the US dollar is, as well as the Japanese yen, we're going to have trade talks, a summit between the Japanese Prime Minister and US President Donald Trump. If we do get some interesting headlines around this, it's likely to cause some major movements, particularly if we see the US threatening to impose tariffs on Japanese imports. Looking at the Eurozone, we're going to have the flash inflation prints for September. But another thing to watch out for is the Italian government will be announcing their new budget on September the 27th. And if the new government goes for a higher budget deficit in order to boost spending in Italy, that could see Italian government bond yields jumping higher again, and that could potentially be a negative for the euro. And going back to the US, we've got a number of US economic indicators coming up in terms of another GDP revision, durable goods orders, and PC inflation. That's the Fed's preferred measure of inflation. But of course, the Fed will be the main highlight.
I absolutely agree, Rahi, that we had this dollar sell-off, and it remains to be seen whether the Fed is going to signal more rate hikes. We're getting the full course of Fed meeting, statement, new projections, new dot plot, and a press conference. So that will be very interesting to watch, as well as any new trade developments. I think the market has downplayed any threats arising from that front, and this allowed it to rally strongly this week. Thank you very much, Rafi. Thank you everyone for watching, and have a great day.